Hey everyone, Dan here. We are after market close on Tuesday, July 6th. We're going to take our daily look at SoFi in this video. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also, if you'd like to receive a once or twice a week newsletter from me starting in about a month, put your email in the Google form, which is linked in the description below. That's going to be rolling out probably in August. I'll send out some info before I, officially launch it, give you an opportunity to opt out if you don't really like, what it's going to be. Or you can, stay on if you do think you like what it's going to be. And we'll go from there. But it'll obviously be stock info, supplemental details on some of the videos that I put out, as well as plays and ideas that I just don't have time to make videos for. All right, so SoFi took another beating today, as I'm sure you're well aware of. I think there's a lot at play with this one, and I want to get this out of the way before we get into the bulk of the video. So I put out a video yesterday about upcoming earnings and what folks are probably going to be looking for, as they try to determine whether or not SoFi is undervalued or overvalued given, the earnings that come out, which we believe for the time being is on August 11th. But just double check that as time goes on. Those dates can change. So I think that that's one big factor that we have coming up. The other big factors that we have coming up are the impact that Robinhood coming public and, the extent to which it's perceived as a competitor and maybe as like a much more recognizable name as a competitor, the impact that that has on SoFi. So I'm going to be doing a video on that in the future. And then certainly we have a risk factor that I just want to throw out there. We'll see what happens if the price does start to come up, probably into like the mid 20s again, something like that. I would think would make this a possibility. I would keep eyes peeled if we start to, especially if we get over that 25 level of resistance and develop that as support. I would put a strong look toward the possibility of a short seller report coming out. If you don't know what a short seller report is, just go look at Hindenburg Research Clover Health. You'll see previous Chamath SPAC that merged with Clover Health. It got to a pretty solid price and then got hit with this short seller report that just absolutely crushed the stock and has continued to struggle to this day. It's been several months since that. I think it was toward the beginning of the year that happened. So I just want to put that out there. Let's put a pin in that for now, that's something that we should be aware of if and when the price starts to recover. Additionally, the bank charter coming up and any hiccups along the way, or if it goes relatively smoothly and that happens, the catalyst that will bring with it and the potential price fluctuation that could bring. I'll do a video on that in the future. So there's all these things in play right now. As I said last Friday in my video, the thing that I think we're dealing with at the moment is the fails to deliver from June 13th that will become aged fails on July 13th. I hope I said June 13th the first time. They'll become aged fails on July 13th. And I had said in last Friday's video, don't be surprised if we see some effort to suppress the price in the initial days of the trading week this week, so that to the extent that any of those fails to deliver are still outstanding, and it's because they don't have a share to locate and they need to buy it on the open markets in order to deliver it, to the extent to which that is a thing, we might see efforts to suppress the price, drive it down so that they can get a really great deal on Friday, would be my guess, because that's the 9th. That gives them the 12th and the 13th for those trades to clear in order to deliver them on the 13th. That, now that I'm saying it aloud, might be a little tight. I could also see suppression. Obviously, we saw it today and tomorrow, which is Wednesday, so that they can buy shares on Thursday, because that may be a safer bet to buy shares to deliver on Thursday, giving themselves Friday and Monday for those shares to settle and then they can deliver it on Tuesday, which I believe is the 13th, if I'm counting my days correctly. But that's what I think sort of we should be looking out for in the near term. Those other factors are a little bit longer term, but I would keep those in mind as well. And I'll be doing videos on all of them, as kind of time goes on. Those longer term ones, there's nothing super pressing, in order to get through them. I think a big factor of what we're seeing now is, I don't know necessarily, or I don't believe necessarily that a bunch of shorts came rushing into SoFi today to help push the stock down. I think they've done enough work previously from points several weeks ago, which we can point back out in the chart when we get there, in order to sort of cast a dark cloud over SoFi for the time being, put a lot of questions into retail traders and institutional traders' minds of, what's a floor for this stock look like, because it seems to keep dipping and then show very temporary signs of recovery that then just peter out, and then the price dips even further than the previous dip. So I think to the extent to which short sellers play a role in this, I think that it's, at least for the time being, prior history of pushing the price down that has just, like I said, created this cloud of uncertainty. And that's a lot of times what the short sellers aim to accomplish. They aren't necessarily just looking to continuously drive down the price as they're shorting the stock. It can be to distort the perception of the supply and distort the sort of like fear and uncertainty around the stock, and just create a bunch of sort of like feeling of chaos, feeling of like, I don't know what to expect from this stock. I don't know where it's going. And so I'm going to stay out of it, right? That's one way to keep buyers at bay. So even if those fails to deliver are going to attempt to be purchased on the open market this week, and so there's going to be an effort to keep the price down, I don't think if they can passively just allow the price to continue to dip and don't do anything to infuse bullish potential into the stock, I think they're more than happy to let that happen. And I think that's what we saw today. Fear and uncertainty around SoFi, as well as the reality of the share lockup date having passed, being over $15, and those shares being able to be liquidated and sold on the open market. That's definitely creating enough supply and selling pressure to keep the price down at the moment. So I think that, again, to the extent that anyone is trying to buy shares in the open market to deliver them before or by the 13th, they're happy to just sort of like stay out of it and not come in and super actively short it in order to bring the price down. They're happy to let their prior work have already done the heavy lifting and just kind of watch it play out. I do think if it started to jump up tomorrow and it wasn't because they were coming in to buy, then I do think that there'd be some either active suppression happening, or if they thought that it was too close to the date at which they would actually want to buy, which would be Thursday, then you might see them hop in and buy a bunch of shares, which would actually cause a big spike in the price tomorrow. So I would just watch to see what's happening tomorrow, but my suspicion is if they kind of leave it alone, they'll probably assume that it'll be pretty sideways, or sideways to down, like potentially another red day, giving them the opportunity to buy up on Thursday, settle that trade by Monday, deliver it on Tuesday. So that's my speculation, but just know that it's speculation. Do your own due diligence. Figure out what you think is happening. Figure out what you think the near and the long-term factors are, and play those if you're getting into the stock. All right, so let's jump into the charts, and then we'll hop over to some data. Volume continuing to be well above the 3-month average, so I still think we're looking for our new average volume here, now that there's a lot more shares available to be traded, and the lockup has ended for a bunch of folks, or for a bunch of shares, I guess we should say. Hopping out of here and sort of like looking back on the chart, what I was sort of alluding to was these previous run-ups toward 25, where we saw a bunch of shorts come in, right? Manipulation here, and then a bunch of hype and covering, and then a bunch of suppression downward. And so this choppy action, as we saw in the past, is a lot of what I think is leading to the gray cloud, the dark cloud, as I'll call it, hanging over and continuing to keep the price of SoFi relatively low. Now, I think are we potentially toward the bottom price point that I have charted here? Yeah. So we should put in some additional price points here and, try to figure out what we might look for a potential dip buy zone. I know folks are probably like, I'm not dip buying this anymore, but maybe I know there's a bunch of folks who said like, hey, at 15, I'm a super buyer. So, I mean, I hope that we don't get down to 15, but if we do, it seems like there's the potential for a lot of buying pressure to come in at that point. What I would look for in the nearer term is something around, actually pretty close to this other price zone that I have charted. Like right here, I'm looking at all of this support here on this long wick, support here, but then also resistance, support, and then resistance, and then support. So it's pretty tight into that 1750. So sometimes we know there's a little bit of a band of, potential bounce zones when there are these price areas that are pretty close together. So I'm going to turn this one purple. I think this is the best chance, the time being, for a bounce. This would be at 1712 is what I have here. Right now it's 1735, but if it can hop back up and get support at that 1750, 1751, then that's going to be a good opportunity to head back over 18 in the nearer term. Additionally, what I would look for is right around here. You see this previous support and resistance here, support, and resistance here. So that's down at 1583, like we talked about. So there is potentially, looks to me anyway, a relatively steep drop-off if we get underneath $17 and can't quickly recover support. There might be a little stop along the way, like here, 1636. But if it can't catch itself there, I would guess it's going to be getting into the 15s, and then that would be the 1489 would be the stop under 15 if that's needed. But I just wanted to put those in case folks are still looking for areas to average down to, areas that they're looking for dip buy, catch a falling knife essentially kind of scenarios, or looking for longer term positions, logical areas at which to average down or take longer term positions, that sort of thing. To the upside, I think that all of these targets to the upside still stand. Getting support over 1750 would be a step to 1807, which is a step to 1872, so on and so forth. We don't really get any great run room until $20. Then we start to get some like 5-6% run room to the next price point, and then there's additional stickiness through the 22s. But I think everyone would feel lucky if we can start to worry about that anytime in the near future. As for now, it's sort of like, well, how do we even just turn this ship around? So that's what I see on that side of things. While we're on sort of like this longer 3-month, 2-hour time frame, let's take a look at the indicators. Just take into account the overall sort of like longer term look on these things. Sitting just above oversold right now, 31.2 on the RSI is what it looks like. So, sitting right there. So, folks are looking for potential dip buy zones. I know that these haven't proved to be super promising in the past when it dipped here and big dip there, but it did run to overbought there. So, maybe that was much, much better. But, in recent days since this big, push down here, push back from the short sellers, however you want to think about it, it hasn't spent as much time as I would have expected in true oversold territory. Here, it just reached it here. We saw a good recovery from there. And then when it came down here, it stayed just over technical oversold. And then here is the next time that it hit oversold. It was at 1971 and spent a bunch of time there. Spent an entire 2 trading days, almost 2 trading days there. Like a trading day and a half there, and then it had a nice run up, but couldn't even get to overbought territory after being so oversold. And so now we see it being pushed down again toward that oversold territory. So, RSI leaving a ton of run room to the upside if there are buyers that want to come in and take advantage. On the MACD, relatively flat. No major swings like we saw back here with a big push upward, like well above the baseline, over 1 on the MACD, and then back well below the baseline, under half of a point, and then a wild swing back up. So relative to that, this is pretty tame action. It is a bit above and a bit below. Definitely the dips right now taking precedence over the pushes to the upside. So, this is all just reiterating stuff that's obvious as the price is coming down. One thing I would look at with the order flow today, like at least per Webull data, they don't have any large scale sell-off orders or outflow today, like literally zero. That said, no large orders coming in either, but there were a ton of medium. There were more mediums going out, more mediums coming in than smalls. So it'll be interesting to see, sort of like as in the coming days, what those potential medium in and outflows were. And especially if some of those medium outflows, I would expect them to be some of those lockup shares being thrust into the open markets. And so to the extent to which can sort of off gas those things and just kind of get those out and purchased and in the markets, it's probably in the long term a good thing. I know it's short term pain for potential longer term trade off, but I would continue to watch those. And there's only going to be a certain amount of time, I think, with a stock like SoFi in a hot fintech market, that those large-scale orders will stay out of the inflow. I'm talking about the inflow, which will push the price up. So this is just saying sooner than later, I believe, we'll start to see some big players come in and start to, put in some sizable purchases of SoFi. So I think, whatever level they're waiting for, it seems to me like it should be getting close to it, given the fact that we're, where we are now. These areas are just sort of spiking this huge run up here that we had on January 7th. And so they're just spiking it from the side, whereas all the previous price action was well below it. And so this is, a relatively long and drawn out and painful retracement. But just keep in mind, in the broad scheme of things, we're just about a third of the way down this enormous green candle, and we've been down much further previously and have shown a ton of support in different areas. So we're just going to have to see how it plays out. Let's flip over to some data and see what's going on there. So here's, the data point that I'm looking at when I'm trying to see if shorts are staying out of SoFi today. It certainly looks like it to me based on what is running through Interactive Brokers, unless they know that we're looking at Interactive Brokers now, and so they're not pushing through or borrowing a bunch of shares from them specifically for that reason. I don't necessarily think that that's the case, but you see the fee, dipped quite a bit here, and then it popped back up in the afternoon. I don't necessarily know why, because the supply came back and it's pretty high at this point. But essentially what we saw, this morning as it came out was about 5 million shares come out. So we had 9.4 million in supply at close of day. This is saying yesterday, Interactive Brokers, so from, I guess, the foreign transactions. And so a bunch of shorts coming in, and then, but we're basically, we're about 500K under, 600K under, but it's a relatively flat day in terms of when things are getting heavily shorted, we would see this be pushed down into just sort of a few thousand, sometimes even a few hundred. So that to me doesn't scream that there's a bunch of shorts coming in. Obviously, we'll see what comes through from Fintel with the short volume ratio. But like I said, relative to IPOE and to SoFi, they've generally been staying out recently. This is what I was talking about before. 614. The 614 large fails to deliver quantity, which then will become aged on 714. So slightly amended those dates. So again, this still puts us in play, I think, for Thursday or Friday, as they want to leave some time for those trades to settle so that they can deliver those shares to whomever purchased them way back when, about a month ago. So those are the ones that I'm going to be looking at as we look for price spikes toward the end of this week in order for them to be able to deliver those shares midweek of next week. So it would be next Wednesday. All right, well, I think that'll do it for this video. I'm not sure exactly what else we would look at that would give us a ton of info, but keep in mind that laundry list that I talked about at the beginning, the charter, the bank charter, the earnings, Robinhood coming on, potential for a short seller report. I would just keep those things in the back of your mind. Like I said, I'm going to have videos coming out on all of them particularly, and we'll cover them in those videos at that time. But I would just keep those as sort of like milestone markers in your head for the future as like large catalyst, big price movers potentially. All right, well, good luck this week, this short week. I definitely wish you the best, and I hope you had a nice day today. I will see you in the next video.